Do you remember this time last year? We were just getting blasted with news articles about how there's an incoming recession in housing market, the housing prices and the housing market is going to crash here in San Diego County. And instead, something quite unexpected happened. So my name is Dan Parker with the Best Life Home Team, your San Diego real estate resource. And I'm going to talk about kind of what we've seen, but in a greater effect, how this is going to impact the market considerably over the next 6, 12, and 24 months. So if you're looking to buy or sell a home here in San Diego County in the near future, you absolutely want to stick around because this is going to be for you. You can get some insights as far as what's going to happen to help you with your approach and your strategy moving forward. So take a look here. This is the median home values here in San Diego County over the last 5 years. This is a 5-year chart. And what we've seen before, 2020 and 2021 is we saw a gradual increase in prices around 5 to 7% every single year. That was kind of like a steady pace. And then all of a sudden, 2020, 2021, we started to see home values go up like a rocket ship. And it started with, supply and demand. The amount of homes for sale started to decrease, and the amount of demand started to increase exponentially, especially with rates as low as they got, around 3%. A lot of money going around in the last couple of years. And so what we've seen in the last 12 months is, around May of last year, we start to see home values decrease around 2% every month up through December. And this was an interesting time because we kind of had mortgage rates going up, and it didn't have an immediate effect on buyers. It had a kind of a lagging effect in the sense that buyers saw that there still weren't very many homes for sale. They didn't think the housing market was going to crash anytime soon. And although rates were going up, they felt like they needed to get in fast. And so that created a lot of demand. But around May and June of last year, there started to be this buyer fatigue. Buyers started to get fatigued at the market. They started to get exhausted. They had less confidence that the housing market was going to stay strong moving forward. And so because of that, we started to see this decline in prices. Once the beginning of the year hit, it all just kind of flipped on its head again. And what happened was, I think that the buyer perception was a big part of the reason of why home values came down a little bit. That changed. People realized, all right, the housing market is not going to crash anytime soon. Basic rules of supply and demand are not going to allow that to happen unless something major happens to bring a lot more homes onto the market. And so since the beginning of the year, we've seen home prices go up once again, even with the worst affordability that we've ever seen. When you look at people's incomes and average salaries versus how much it's actually costing them to own a home with mortgage rates where they're at today, it's pretty unbelievable. But the truth is, when there's not a lot of homes for sale, that makes it very, very challenging. And this is why this is important. And this is where this is heading moving forward, is when you look at supply versus demand, this is kind of a more healthy market. Really, we should have closer to 10,000 homes for sale in San Diego County. These top peaks here are around almost at 9,000 homes. The light blue is homes for sale, and the dark blue is the demand. How many people are going under contract with homes? How many people are getting offers accepted? That is the demand in our current market. The last couple of years, we've actually had demand higher than supply, which is a major issue. And now we have by far the lowest levels of inventory we've ever had this time of year, which is right here. So even though demand is decreasing, we're still in this situation where home values are at least staying even, if not starting to, they're going to continue to increase over the short period of time. And this is an issue. When you look at the market in total, what's going to happen in the future? And I think a lot of this has to do with where mortgage rates are going. And a big factor in that is going to have to do with the Fed funds rate. That's why the rates are where they currently are. So what is the federal government, the Fed Reserve, what are they going to do to impact housing prices and impact mortgage interest rates? Because this whole situation where they've increased rates and tried to crash the housing market proved that they don't really have that effect. They can't have that effect. They can't create supply. They can only affect the rates, which is going to have to do with the demand. So even if demand goes down, the problem is there's so many people sitting on a 3% mortgage interest rate, they don't want to sell their house. And that's what we're seeing right now. So when we're looking at what's going ahead, we're in a true freeze right now because I'm seeing more and more articles like this from economists, new articles all over the place that you can see. Is the Federal Government, is the Federal Reserve, are they going to lower rates by the end of this year, because that was the anticipation. They're going to start lowering rates. Affordability was going to start going up. People that bought this year can refinance and everything is going to look all well and good. But the reality is they haven't got inflation to where they want it. They haven't been able to increase unemployment, which is what they want to do to be able to have an impact on inflation. And more people are saying they do not believe the Fed is going to lower rates this year. And if we look here from Vanguard, they have an article that says, we believe inflation will continue to be moderate, but remain above 3% through year end. Now, again, Jerome Powell is adamant he wants inflation at 2% or lower. So if it's 3% through the end of the year, we're probably not going to see rates coming down this year. Unemployment will trend higher to a still reasonable 4.5%. So we are looking for unemployment to go up, which is always messes with my head to say that we want to see unemployment go up, but they want to do that to help tame inflation. And in fact, Vanguard's model anticipates the Fed won't be in a position to cut rates until the middle of 2024. So, when people are talking about what they expect to happen with the Fed funds rate, I can't even tell you how often they're wrong. So even though this is where a lot of the economists are saying this is what seems right. I think it's very unlikely that we're going to see rates come down at any meaningful level over the next 6 months, which means we are in a true housing market freeze, you guys. That means the amount of homes for sale is really low, but it's not going up. And the home value, the prices for the homes out there, the median home value is going to pretty much stay flat too. It might go up a little bit, might go down a little bit, but both of those at a pretty insignificant level at a time in the market where we are heading into the winter months. And what that means is we always see a drop off in demand and supply through the winter months, but we're already at that winter month level. So it is scary. It's scary looking at what's going to happen in the next 6 months, because the amount of homes for sale is probably going to decrease from at historic low levels. We're already at historic low levels, so it's going to decrease. And if we do see rates start to come down 6 months from now, there's going to be an immediate jump for people wanting to buy homes, but there's going to be this lagging effect on the amount of homes for sale, which is a scary, scary situation to be in if you are looking to buy at that time. So affordability might be better, but good luck finding a home. Good luck getting an offer accepted. So what I'm saying and what I'm telling our clients that we're working with is you still have opportunities in this market. You just have to be really strategic and truly understand what you're up against. And we have a lot of clients, a lot of people that we're working with are having a lot of success in this market. So if that is you, if you want to have success in this market, if you are looking to buy or sell right now, if you want to know if that is right for you or not, feel free to reach out. You can text me at my personal phone number, 619-719-1122, or you can click below on the discovery session link for a free 30-minute Zoom call with myself and my team to help you explore what is the right situation for you. So hope this was helpful. Thanks so much for watching. We'll see you on the next one.